Have you ever wondered where the big players are putting their money? Every quarter, top Wall Street hedge funds have to disclose their latest investments by filing a 13F form, giving us a rare peek into the minds of some of the most successful investors on the planet. For everyday investors, these filings can be a treasure trove of valuable information. By tracking what these financial giants are buying and selling, you get a better sense of how they're navigating the often turbulent waters of the stock market. In today's video, we're diving deep into the most recent filings for three legendary investors: Warren Buffett, Michael Burry, and Bill Ackman. These guys are some of the sharpest minds in the game, and their latest moves can offer insights that could shape your own investment strategy. We're going to break down which stocks they've been buying, which ones they've been selling, and what these decisions might mean for the future of the market and for your portfolio. Let's start with Warren Buffett, known as the Oracle of Omaha for good reason. His firm, Berkshire Hathaway, just released its 13F report for the second quarter of 2024, and it's full of surprises. Perhaps the biggest shocker is that Berkshire has cut its stake in Apple by nearly half. For a long time, Apple has been a cornerstone of Berkshire's portfolio, so this move has definitely raised some eyebrows. But why would Buffett sell off such a huge portion of Apple, a company that has consistently been one of the most valuable in the world? While Buffett's reasoning is never fully transparent, there are some clues. By the end of the quarter, Berkshire's cash reserves swelled to an all-time high of $276 billion. This suggests that Buffett is playing it safe, building up a war chest in case market conditions deteriorate. However, it's not all about selling. Buffett also made some interesting new buys, including Ulta Beauty and Heiko Corporation. Ulta Beauty, for those who don't know, is one of the top beauty retailers in the US. It has a narrow economic moat, meaning it enjoys a level of protection from competition thanks to its efficient capital allocation and strong market position. According to Morningstar, Ulta is currently undervalued by about 18%, which makes it an attractive pick for a value investor like Buffett. On the other hand, Heiko specializes in making replacement parts for airplanes and defense systems. It's a niche market, but one with high barriers to entry. That said, Morningstar believes the stock is currently overvalued, trading at 36% above its fair value estimate of $173. Buffett's moves here show a strategic shift towards sectors with strong, long-term growth potential. Ulta's dominance in beauty products and Heiko's position in aerospace reflect Buffett's ability to adapt and find value in unexpected places. So, what does this mean for you? It could be a good idea to keep an eye on sectors with resilient growth, like beauty and aerospace, as they continue to evolve and adapt in the current economic environment. Now let's move on to Michael Burry, the man who famously predicted the housing crash of 2008. Burry is known for his bold and often contrarian bets, and his latest move is no exception. He recently bought 100,000 shares of Shift4 Payments at $73 per share. Shift4 is a payment processing company that primarily serves the hospitality and entertainment sectors, and now it makes up 14% of Burry's portfolio, a huge position by any measure. Since Burry made his purchase, Shift4's stock has climbed to $79 per share, giving him a nice return already. In fact, over the past 3 months, Shift4's stock is up nearly 19%, and it's surged more than 44% year-to-date. The company's payment volumes have skyrocketed, jumping from $26.8 billion in the second quarter of 2023 to an eye-popping $41 billion in the second quarter of 2024. That's a massive increase, driven by new partnerships with big names like the NFL's Chicago Bears and Pacers Sports and Entertainment. But that's not all. Burry is also making moves in the healthcare sector. He recently acquired more than 24,000 shares of Molina Healthcare, a company that specializes in providing healthcare services to low-income individuals and families. Molina's revenue increased from $8.3 billion in Q2 of 2023 to $9.4 billion in Q2 of 2024, which helped boost its stock price by nearly 19% in just the past month. JP Morgan has given Molina a buy rating, with a target price of $378 per share, significantly higher than Burry's purchase price of around $297. What's interesting about Burry's strategy is his focus on high-growth sectors like fintech and healthcare. These industries are expected to expand in the coming years, and by investing in companies like Shift4 and Molina, Burry is positioning himself to benefit from that growth. If you're looking for high-growth opportunities, fintech and healthcare could be sectors to watch. Before we dive into the final investor on our list, take a quick moment to subscribe to our channel if you're enjoying this deep dive into the strategies of Wall Street legends. Your support helps us continue to bring you valuable insights that can help you with your investment decisions. Don't forget to hit the like button as well. Finally, let's talk about Bill Ackman, the billionaire activist investor. Ackman has been making waves lately with two major additions to his portfolio, Brookfield Corporation and Nike. Ackman bought 6.8 million shares of Brookfield, a company valued at over $105 billion, giving him exposure to sectors like real estate, infrastructure, and renewable energy. Brookfield has been weathering some market headwinds, particularly from rising interest rates, but it still managed to post an 11% increase in distributable earnings in its most recent quarter. Ackman's investment in Brookfield is part of a broader strategy to seek out reliable, long-term growth, even in uncertain times. Despite canceling a planned IPO for his Pershing Square USA fund, Ackman remains confident in Brookfield's ability to deliver steady returns. In addition to Brookfield, Ackman also picked up 3 million shares of Nike. The iconic sportswear brand has faced some challenges lately, including a projected 10% decline in sales for its first fiscal quarter of 2025. But Nike's brand strength and global market presence make it a strong long-term bet. Ackman's faith in Nike's ability to bounce back is backed by its involvement in major marketing events like the Paris Summer Olympics. With its price-to-earnings ratio now sitting below 22.5, Ackman likely sees this as an opportune time to buy in before the stock rebounds. So, what can we learn from these three legendary investors? Warren Buffett is focusing on undervalued companies with strong growth potential. Michael Burry is betting on fintech and healthcare, and Bill Ackman is looking for reliable long-term growth in sectors like real estate and consumer goods. Each of these moves reflects a different strategy, but all point toward a common goal: finding value in an ever-changing market. As you consider your own investment strategies, following the moves of these financial titans can offer invaluable insights. Keep watching, keep learning, and stay informed, because that's how you stay ahead in the world of investing. If you enjoyed this video, make sure to hit the like button and subscribe to Economic Hero for more insights into the world of finance and investing. Stay tuned for more videos that will help you navigate the complex world of money management. Thanks for watching.